Morning, everyone, to the first installment of KPMG's April Asset Management webinar series, where we aim to tell you all you need to know about the existing and emerging issues within the asset management industry in 30 minutes, but hopefully less. My name is Hugh Tonge, and I'm a director in our asset management practice, and I'll be your host and moderator for today's session. So we have a number of these webinars scheduled throughout the month of April, which you can see on screen. And we really hope that you can join us for each of these as we explore a number of different areas from human rights and supply chain due diligence for asset managers with our forensics team. Our tax team will take us through Pillar 2 considerations for funds. Our legal team will tell us a bit about our regulatory updates, which are coming down the track at us, and overall how we navigate some emerging changes which are coming down the asset management space with our strategy team. As with any good webinar, we do have the ability to interact and to ask Q&A throughout. So we encourage everyone to do that as much as possible throughout the course of this, and we'll aim to get as many of the questions as we can addressed, either during the session or at the end. So look, we're going to kick off the series really with a topic and a subject which, look, is always really interesting to read and to hear about when you're on the outside, but it's one that when it happens to you, it can have a serious impact both on businesses and individuals. And really the question we're going to be asking today is, should we still worry about fraud? And look, hopefully not a spoiler alert for anyone, but the short answer is yes. And look, with the emerging and development of technology at a pace which most people are struggling to keep up with, it shouldn't be any surprise that the risk of fraud is moving in lockstep with the improvements in technology today. And even if you just look this week, ChatGPT has unveiled a new image generator as part of its 4.0 model. And it's much improved at generating text inside images, and people are already using this to create and generate fake receipts for the likes of restaurants. And look, this just adds another potential tool to the growing repertoire of AI deepfakes that are available to fraudsters. And I'm joined today by Catherine Gillespie, who's a managing director within our forensics team, who's going to tell us more about why we still need to be worried about fraud. So Catherine, I might hand it over to you.
Thank you very much, Hugh, and thank you everyone for joining. And Hugh, yes, complete spoiler. We do still need to be worried about fraud, and fake documents is definitely one of those key themes that we're going to explore in more detail today. So our plan for the webinar, we'll just do a little bit of an introduction. We'll discuss some of the fraud trends, some of the things that we've been seeing and working on. We will then look at having a quick overview of some of those detection and prevention mechanisms to help companies out. Look at some key takeaways, and then we will open the floor and would welcome any questions. If we don't have time to cover everything today, I'll definitely circle back with you. So, should we still worry about fraud? I am challenged quite frequently about whether we still need to think about fraud. Surely modern technology means fraud is detected and prevented before it even starts. And unfortunately, as good as technology can be in helping us address fraud, at the end of the day, it's an individual who's seeking to get get some form of personal gain. And so they will work and use the new technologies available to them, new systems, new environment and roles in order to exploit controls and still commit fraud. So it's something we always need to be vigilant for. So what are fraud? And whilst technology, there's lots of new mechanisms and ways to commit fraud, ultimately, there's kind of three main buckets of what fraud is and what does it look like in an organization. We've pulled some statistics from the Association of Certified Fraud Examiners, who produce a report called the Report to the Nation, which covers the costs and effects of occupational fraud and what we are seeing in the market across all industries. And then focusing on to our specifics. So then the three main buckets. We've got financial statement fraud, the deliberate manipulation of data and financial statements. It is very common. It's a lot less common than any of the other buckets. About 5% of the cases seen, but does often result in a higher value of loss to a company. About 750,000 of the cases that were looked at in the last year. Corruption is another very frequent a element of fraud, and you might think of corruption. Is that fraud? How does that link? And covered in that corruption bucket is not only your bribery elements, but also things like conflicts of interest. And that is a really key aspect and quite a common aspect of fraud that is often overlooked and missed. And we're going to explore a case on that in more detail. Primarily, the largest and most common fraud is asset misappropriation. It's around 89% of the cases that were part of the study. And that covers a really broad range of different types of schemes, from just theft of cash in front of you to also more invoice fraud. And we'll look at some of those more of those schemes now. So what are the key kind of occupational fraud schemes we're seeing? And what we mean by occupational fraud are these tend to be the frauds that may be committed by those within the organization, employees that are deliberately manipulating the controls within an organization. So we touched on it a moment ago. We'll start with conflicts of interest. And this is where an individual is maybe manipulating the procurement process for their own personal gain, making sure that sales or purchases are made to a company either they control or that they are ensuring that services are purchased from a company that they know, and perhaps they may be receiving some financial benefits for directing money to that company. So two cases that we've been working on, or one particular case that we've been working on that hits this conflict of interest that I wanted to draw your attention to, was around an individual who had the power to manipulate the procurement process. They knew the different steps and the different documents that were required to enable a purchase order to be created. And they knew who needed to approve in order for the invoice to be paid. And what happened is, through a series of false documents that were created by the individual, they were able to manipulate that procurement process, either by obtaining a purchase order suggesting that everything had been done correctly, and they had all the appropriate documentation to support the award of work to one of their companies or a company that they were in favour with that individual, or indeed manipulating the process later on at invoice, and just after all the work had been completed, submitting through an invoice and documentation to suggest that a procurement process had been followed, but it hadn't. And so in this case, there was exceptions made in order to make sure that the payment went to the third party. And in this case, there is definite concerns that that individual is benefiting behind the scenes. A really interesting element of that is a lot of people in the organization had concerns about the individual, but weren't quite sure how and didn't have enough sufficient proof in order to really raise an issue. So it had been going on for a number of years. And that's not the only case. We've also seen instances of conflicts of interest where it might be that you've 10 different suppliers for 10 different products. And we've seen instances of an individual within the organization setting up their own company and then making sure, slowly but surely, that those 10 different products were all purchased through their company instead. And they were making a gain then in the difference between what they were charging and being charged by those 10 different companies and what they then charged on to the client. So it's definitely, it's a very hard area of fraud that's quite hard to detect. But generally, by looking out for themes like maybe continued cases of purchase orders or invoices being dated before a purchase order was being raised, That might happen frequently for one particular entity because of the nature of the work they deliver. But definitely encourage those of you working in finance, if you're continuing to see cases where invoices are coming in after a purchase order, really trying to understand that more and have all the correct processes being followed. Is there any risks that this could be a conflict of interest? Moving on, then we've got cash and asset theft. So just draw that's kind of pretty sort of, let's just say what you see basically with cash and asset theft. But what I wanted to draw on is maybe just provide you an example of how we've seen that cash theft operate and theft of assets within a company recently. And again, this case was not the result of falsification of documents, and that wasn't one of the main schemes used in order to perpetrate the fraud. In this case, what we had set up a separate business in a very similar industry to their employer, and then a little bit of a side hustle. And what they did is they directed invoices that would have been due for payment by their own company. They were directed to their employer instead, and this individual had the power to approve the invoice. And what happened within the company is they received the invoice from a known supplier. It looked legitimate, and they had to sign off from this individual. And so the payment was approved, and that was a payment for a service that was not for the benefit of the company. And where that was certainly more linked to there could be additional controls within the business in that case, and that was one of our recommendations, because there was evidence on the invoices themselves and the supporting information provided that had a little bit of a deeper look being undertaken, by some maybe of the finance team, or when the invoice was being approved, that segregation of duties. It may have been spotted that this doesn't relate to the company. So just always keeping well on top of those controls are really helpful. Expense reimbursements. Fake expenses. It still happens, and as you mentioned earlier, there's even more ways of making and creating a false expense. And this is one of those areas where probably the kind of the when someone is under pressure, it's the place they go to first in order to try and maybe get that little bit of extra cash, which might help them whenever they're in a desperate situation and under pressure, which may be the reason that they have decided to commit the fraud and try and get some additional cash. Payment tampering is quite short-term in nature, as it involves intercepting payment details and having it directed to your own account. Sooner or later, the actual third party does want to follow up on their money. So we don't see a lot of that, but it comes up every so often. But the key, some of the key areas I wanted to draw your attention was this billing and payroll schemes. And this is all around that fake vendor setup and ghost employees. So ghost vendors, ghost employees, they're fake. They don't exist. And someone has been able to get that company or employee set up on the system and funds then directed through to themselves. So, for example, someone might send an invoice or request that a company is set up on the procurement system, on the finance system, and then they start sending through invoices for services that have not been provided. And in a similar way, then for ghost employees, having someone set up on the system who are receiving regular payments on a monthly basis who do not exist. So those are some of those key themes that we're seeing more of at the moment and have been working on. Also, what we have are some external threats as well. So I think this is maybe one that people are a little bit more familiar with, whether, an external actor, maybe in this, particularly in cyber, trying to get access to funds in the company. I think it's the bit around the individuals within the company and the risk they provide, which sometimes is forgotten. But cyber threats continue to be an ongoing and ever more prevalent threat to companies. So everyone will have heard of the different, anonymous hacking, ransom requests in order to extract funds. But then we also have those schemes where the emails have been hacked, and a threat actor purports to be someone senior within the organization, and asks for payments to be made that are exceptional, outside of the normal control, and putting pressure on an individual to force that through. One area that we're seeing more of in some of our discussions is not only as there sort of cyber threats from external actors who are seeking to extract money, but we're seeing more cases of maybe information and corporate IP that are also being extracted, which also falls under that cyber threats a risk as well. Agents and third parties, whenever you're working with a third party, I've involved in a couple of disputes where you may receive inflated invoices, where you may have invoices maybe based on estimates, or the third party you're working with is adding on additional services that weren't provided. This just certainly takes a lot of vigilance from those that are approving payments within an organization. Have you really received the service that you have been providing? Are you confident in that, within that? I just want to focus a little bit on the purported business partners section. We've seen a couple of different cases where, again, falsified documents or falsified information has been provided in order to try and give confidence into that there's an investor wanting to invest money, or that there's a deal to be done. So we have seen cases where false bank information, bank statements have been provided through as support for investment values. That's always one to be wary of. And also what we've seen more recently is maybe third parties trying to suggest that they have an investor, someone that wants can provide financing. And indeed, but in order to make the deal happen, there has to be this initial payment. And we were asked by a client to do a little bit of due diligence on the third party, on the potential investor, and find out more about them. Were they who they said they would? As a global firm, we reached out to our Malaysian colleagues in this case, who were able to conclude in very short order that this was a fake scheme and a fraudulent scheme as well. The company, the address, that didn't exist. The information that had been provided for those that knew more about in the local environment, they knew that was false information around the AML requirements. And whenever you do a site visit, and the very helpful receptionist tells you the address doesn't exist, that gave our client confidence that maybe this was something they needed to step away from, and rather quickly. So that's sort of our overview of threats. So how do we detect it? What do you do? How can we continue to support our companies in fraud prevention, even with the new technologies out there? And the first one we would suggest is open communication. Making sure you have channels for employees to report suspicions, because that tends to be, certainly according to the Association of Certified Fraud Examiners, the most significant way frauds are identified. It's 43% of cases in their estimates from last year. And those mechanisms for raising concerns can look like a range of different things. It could be an email address within a business in order for people to make anonymous reports. You might have act as a third party where people can phone me at any time if they want to make reports. or also we have whistleblowing, people have whistleblowing channels as well, and that's also something we can support with if anyone wants to discuss that in more detail. But having a channel for your employees to raise their concerns, either internal in the organization, through their line manager, or having a separate ability is absolutely key to helping identify fraud. And one key thing I'd also mention on that is if you do receive a whistleblowing report or some kind of report, do try and thoroughly investigate it. In one of the cases I alluded to earlier, where we had that third party who had a side business, there was 3 different whistleblowing reports made in that case, and they weren't taken seriously by the company until the last one. And then we found out that not only was the original reports upheld, but actually there was additional information as well. So then moving forward, strong internal controls. We've covered a little bit of that today, but making sure you're doing risk assessments, continually thinking about the changes to your systems, to technology, where might you be more vulnerable. Really having that segregation of duties. Finance of such a key role. I do see a trend at the moment where, if a purchase order, an invoice matches a purchase order, it goes through, it gets paid. And that level of additional review and making sure it all makes sense and there isn't information in that invoice that suggests it shouldn't be paid, that needs to be considered. And also, for many of these different schemes, one of the key trends that we tend to see is, people trust their colleagues, which we want to do. We want to work in organizations where we trust people. But sometimes that trust can be exploited and people are used in order to get around controls and ensure that they aren't operating effectively. So being alert for that is always key. Training awareness is another way of helping people within your organization identify risks. Again, it's very easy for me to know that fraud is something we continue to be aware of, but not everyone in the organization has that awareness, and it's helpful to provide training and give them further information so it helps protect the business overall. Utilizing technology, both to help your internal control environment. There's some different, lots of different technology and our ERP systems that help monitor data, and that can help us detect anomalies as well when identifying and detecting fraud. But ultimately, a culture of integrity is really, really key. If individuals feel that, everyone is doing it, or that they see other bad practices, that can encourage and give people a rationalization for why they should and would commit fraud. So that culture of integrity is something to be fostered within the organization. So that's a couple of key measures. So just before we move on to questions and answers, just a couple of our key takeaways. So fraud is an ongoing issue. It remains an ongoing issue. And for the amount of time when people want to try and extract money from companies for their personal gain, it will always remain an issue. We just need to be more creative in our responses. Key theme that we're seeing is false documentation. It's certainly an increased trend in how controls are being exploited in order to extract that money. So definitely be alive and alert whenever you've been provided with the document, and definitely review it as well before approving payments. Internal controls, key part, and one of those significant areas is around making sure that your employees and individuals, and indeed third parties as well, have opportunities to report to you and tell you if they think they've got a concern. And my final one is be skeptical, trust people less whenever, and be vigilant for both internal and external threats. Internal controls are often compromised because we do things for colleagues that we trust. So I'm going to pass back to Hugh now to see if there's any questions for us.
Catherine and Doug, thanks for that really short but really comprehensive overview of the main risks and prevention measures. We've a couple of questions that have come through. The first one, it's kind of on something you touched on during the session there. It's a straightforward enough one. So how do you go about investigating concern which is either directed to you or raised on a whistleblower channel?
So there's the key aspect is around on how you really get to the bottom of the issue is working out what your key data sources are. It'll change depending on the nature of the report. So for example, you might be starting to look at financial data and extracts of that as a the first to identify will have. So for example, if there's a report that payments have been made to a company for the benefit of an employee, looking to see have any payments been made to that company is the first step. And then you overlay that, and I kind of talk about this sort of triangulation of data. You can extract and look at the finance data, but also in many communications data is also a key source of information, particularly when merged with financial data and third-party information as well. It helps you identify the issues. So in the case of let's see, so in one of the case that I touched on, where it was an employee had a side hustle, that was identified by a message that had come through on a mobile, and so we have the technology that can kind of extract all of that off. And we saw this text message or WhatsApp message that then had an invoice attached, and that we sort of pulled the thread on that, matched it to the ERP data, and found that, hold on a minute, that actually, and if you looked at the invoice, that relates to it doesn't relate to the company. So it's that the key is getting the right information to help trying to understand if there's any issues under that can prove or give some kind of support to the issue that's been raised. And then you might want to meet, and there'll be interviews and things like that. But data is key. And maybe one thing to note on that as well is that, there's been many cases when whistleblowing reports are raised in good faith and for good reasons, but actually the reporter hasn't maybe seen or had all the evidence. So whilst in that case their issue hasn't been upheld, there is reason for it, and that is welcomed was welcomed by the organisation as well.
And we're coming up on time, but I think we've time for one. So one of the participants it's an asset management specific one, specifically relating to fund administrators, and it's do we have any advice when it comes to the scope of a fund administrator's responsibility for expenses which get allocated to private funds, and this is in light of specific SEC requirements, and the participant is given specific SEC references. But so generally, Catherine, do you have any sort of thoughts or advice around that piece around fund administrators and their responsibilities when it comes to expenses around getting allocated to private funds?
Yeah, I'd like to circle back a little bit on that and just look at the reference, the SEC reference that's been sent around as well. But for expenses, trends are always really useful as a mechanism to try and monitor that and trying to get an understanding of those expenses that might be allocated to the extent that it's possible. And sometimes having processes in place, and that sort of a control environment at the start of what agreeing, this is what we will and will and won't do around the information provided, would be another piece of advice. But I'll circle back on that and take that away.
We're just up on time now, so at this point, look, I'd like to just thank everyone for attending. And thanks very much for the interaction throughout. It's always really appreciated. This webinar, it's recorded, so the recordings and the materials will be circulated at a later date. You'll see them all across our social media and our LinkedIn. And look, if you have any other questions in the meantime, feel free to either reach out to myself or Catherine, or your usual KPMG contact. So at this point, I'd like to say just again, thanks very much for attending, and hopefully we'll see you at the next one.